Tech companies have always been a favorite among investors, and for a good reason. They offer massive growth potential. And if we look at the top companies by market cap, you will notice that tech is dominating the list. But here's the catch. Tech stocks often trade at a premium. So how do you decide which ones are actually worth your investment? In this video, I will compare these 9 stocks head to head, using key criteria to determine which tech stock stands out as the best option to buy. In each round, I'm going to give the winner of that round the full 3 points. And the number 2 gets 2 points, and the number 3 gets 1 point. At the end, we are going to sum all the points to see who's winner. So, without further ado, let's dive into it. Kicking things off with the market cap. And probably you can guess the top 3 companies here, right? Coming in first we have Apple, of course, with a massive 3.7 trillion market cap. In second we have Nvidia with 3.3 trillion. And in third we have Microsoft with 3 trillion. At the bottom of the list we see Netflix with 430 billion, which is still a crazy amount, of course. And next up is the 5-year revenue compound annual growth rate. It is often assumed that tech companies have massive growth numbers, so let's see the actual numbers here. And coming in first we have Nvidia with 62%, which is really impressive. In second we have Meta with 18%. And in third we have Google with 17%, both locking in their first points. Next up is the 5-year net income compound annual growth rate. It's nice to have high revenue growth numbers, but maybe even more important to see higher net income growth numbers. And coming in first we have again Nvidia, with an impressive 92%. In second we have Netflix with 36%, which was kinda surprising to me. And in third we have Meta with 28%. At the bottom of the list we have Oracle with only 1%, which is really disappointing. And as said in the beginning of this video, tech companies tend to trade at a premium. So let's check the PE ratio to see who's the winner here. Sitting at only 22 we have Google, claiming the full 3 points here. Meta is also doing a pretty decent job with 29, earning them 2 points. And in third we have Microsoft with 33. Tech companies are known for generating a high return on their capital. So let's see who's the winner here. I think this is also one of the most overlooked numbers. And coming in first we have MasterCard, claiming their first points at an impressive 53% ROIC. In second we have Apple, with also an impressive 48%. In third we have Visa, sitting at 22%, which is a great number, and earning them their first points here. Netflix is at the bottom of this list with 14%. Still a decent number, but not enough to lock in some points here. And now that we are halfway of analyzing these companies, it is time to see the halftime score. And at the bottom of the list we have Oracle, still sitting at 0 points, which is really disappointing. Visa isn't doing a great job either, with only 1 point. And the same goes for Microsoft and Netflix, both sitting at 2 points. MasterCard managed to score a full 3-pointer once, and is looking pretty decent. But then, the third spot goes to Google, with a 4 points in total. In second we have actually 2 companies, both sitting at a total of 5 points, Meta and Apple. And the halftime leader is Nvidia with a massive 8 points. And remember, everything is still possible because we have some other metrics to look at. So without further ado, let's see who's the winner in the next round, which is the cash to debt ratio. Tech companies tend to have higher debt at the beginning of existence. But after the company evolves, they generate a lot of cash. And with this metric we want to see who has the highest cash available compared to their debt. Usually you want this number above 1, with these type of companies. And coming in first we have a tie, which is kinda surprising, both sitting at 3.76, Google and Nvidia, both 3 points. In second we have Meta with a decent 1.59, and in third we have Microsoft with 1.15. Oracle isn't looking any good with only 0.13 here. And next we have some controversial metrics, the dividends. Some say that tech companies should focus on developing the business instead of paying out dividends. And some others say they should buy back shares. But down the line, almost every tech company in this list pays a dividend. So let's see who's the winner here. And this is also a very painful moment for Netflix, who doesn't pay any dividend. So this means they are ruled out of this metric and for the upcoming 3 metrics as well. But coming in first we have Oracle, claiming their first 3 points, which were much needed. The highest dividend yield at 0.9%. In second we have Microsoft, and in third we have Visa. At the bottom of the list we have Nvidia, with a really cute 0.03% dividend yield. And next to that dividend yield, we want to see who has the highest growth numbers. And in first we have Nvidia, which was kinda surprising, having the lowest dividend yield but the highest growth number at 16%. In second we have Visa, and in third we have MasterCard. Another important metric is the dividend streak, telling us how reliable the dividends were historically. And coming in first we have Microsoft with a 3-pointer, a massive 20-year dividend streak. In second we have Visa, and again in third is MasterCard, both also really impressive numbers. The last dividend metric is going to tell us how safe the dividends are. We want this number as low as possible in order to reinvest as much as possible back into the business. The lowest number could be Netflix, but since they don't pay any dividends, I decided to rule them out on this one as well. Nvidia is sitting at only 1%, so again a full 3-pointer here. In second we have Meta with 2 points, and in third we see Google, sitting at 10%, earning them 1 point. The 5-year return. We have come to the last metric of this video, telling us how much the stock has performed including dividends. The higher the better. And keep in mind that the S&P 500 is sitting around 100% in the past 5 years. So were you better off buying one of these companies instead of the S&P 500? Well, coming in first we have Nvidia with a massive 1649%, which is insane. But most other companies are doing an amazing job as well. In second we have Oracle claiming 2 points here. And in third we have Meta with a impressive 220%. The list is ended by both Visa and MasterCard, who underperformed the S&P 500 by a decent amount. And with the last points awarded, the table has shifted drastically. The half-time leader was Nvidia with 8 points. But are they still at the top of this list? Well, starting at the bottom of this list we have Netflix with only 2 points, which is a bit of a letdown, but also massively impacted by paying no dividends. Then we have 3 companies with 5 points in total: Apple, Oracle and MasterCard. Visa had an amazing second round and sees a total of 6 points here. And now we have 3 spots left, but still 4 companies to go. And that's because the third spot is shared with Microsoft and Google, both 8 points in total. And now there were only 2 companies left. Nvidia was the half-time leader. And if you paid a little attention in the second round, you know that they scored a lot of points here again. So with a total of 20 points, the winner is Nvidia again. And to be honest, this was a bit surprising to me at the start of this video. Looking back, it is totally deserved based on the things we checked. And it is an impressive company, don't get me wrong. Hence why it is also trading at a heavy premium. But the company is doing an amazing job in the recent years. The only question is, can they keep up the pace or will they disappoint in the near future, with everything that is going on right now in the world? Well, time will tell. So to wrap things up, what were your thoughts on this list? Are you surprised by the outcome, or did you thought some companies would deliver better results? Please let me know in the comments down below. And in the coming months you can expect more videos like this one, so stay tuned. And remember to always do your own research and never fully trust what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.